So we're very pleased to have Bernama and Vivek here. We understand that most of the media has gone because of the announcement of the by-election. Yes, so it's created a lot of excitement. But thank you for being here anyway, because we believe that we have an important um, message that we want to inform the world actually that what the Asia School of Business is going to offer. And first of all, let me introduce the people that are here. On my left is Professor Robert Merton. He's a Nobel laureate from MIT, and we're delighted to have him here as chairman of our advisory board of for the master's program, new master's program, and the first of its kind in the world on central banking. It's going to be offered by the Asia School of Business. And then on my right is Professor Fine. He's also from MIT Sloan, Charles Fine, and he's the president and dean of the Asia School of Business that was set up 4.5 years ago. It was to do an MBA program, but now the MBA program has taken off, and we're very pleased with the success that it has achieved. And so we are going to offer a second program now, a new program. And on my left is Professor Ellie Remalona. Is that correct?
That's
the
very
pronunciation? Yes. And Dr. Ellie has been with the BIS office in Hong Kong for 20 years. And so a highly experienced work with central banks, especially from the Asia region and globally as well. And on my right is Hans Gernberg. He's also joined the Asia School of Business. He was from the CSET Center that is based in Kuala Lumpur here, that served about 22 central banks from the Asian region in capacity building and research. So we have a high-powered team, and we've just completed our meetings of the advisory board for this master's program. So with that, maybe let me invite Eddie to say a little bit about the program. We have a press release here. Do they have a copy of the press release? Yes, that will tell you what the aspirations of our program is for the Asia School of Business of this Masters in Central Banking.
We're excited about this program. We think it will be in a class of its own. The curriculum will be focused just on central banking. It will be comprehensive. That means we cover all aspects of central banking. I think we're the only program of that kind. It will be forward-looking, which means we look at the advantages of data, the advantages of digital technology, and help central banks learn how to use these advantages. It will be grounded in reality. That means everything that we teach, all the theory that we teach will also be applied to practice. We will have projects, MIT-style projects, including projects that will be hosted by central banks. It's a one-year program. We hope to get 40 students in the first year. The students have spent 6 weeks at MIT in Cambridge. And in fact, the involvement of MIT faculty is very deep. Besides the 6 weeks classes at MIT, we will have faculty from MIT coming over to Kuala Lumpur and also teach a few courses here in Kuala Lumpur. The faculty that we now have in place, apart from having very strong academic backgrounds, They also have extensive experience working with central banks. I was at the New York Fed for a long time. Hans was at the HKMA and also was the head of CSEN for a long time. We have faculty who worked at the Reserve Bank of New Zealand and faculty who worked with the IMF.
This is in-house faculty here.
In-house faculty. This is apart from the IMF faculty who will be helping us. We have just finished our first draft of the curriculum. We've submitted it to the Ministry of Education for accreditation. And so we're going to begin looking for students. And I think we would get a good turnout of students.
So maybe let me invite Professor Robert Merton to say a few words, especially of our meeting today.
Yes, so first I kept stepping back a little bit and mention the following things, which you know, which is that Asia as a whole region, on the whole, is growing. It's going up, the GDP is going, yeah, it's got troubles. Every place in the world has trouble. But secularly it's growing. That's good news. But what goes with that is when you have a higher standard of living that comes with higher GDP, your financial system has to also be upgraded to match that. So that means, like it or not, whatever, just about every country in Asia is going to have to make major and significant improvements to a system. What's coincidentally good news, precisely at a time when that has to happen, enormous amounts of technology have become available. You're certainly known, artificial intelligence, big data, fintech is a favorite thing, and payment system, everything's changing, digital and so forth, many, many things around. So if you combine having to build a new financial system and great new important technology, if you put the two of them together, which is coincidental because you're doing it, you have an opportunity, every country has at least the opportunity to leapfrog and become the leader in their financial system based on most modern technology. You see that spirit. Now, why do I give you that as background? That's the good news. There are, as with all things, issues with that too, but that's good news. Central banks play a very critical role in just about every country in the world when it comes to financial things. It's not only what they're empowered to do or supposed to do. They're the ones in the country that usually have the highest reputation in the government for knowledge of those things, highly trained, and being, not being involved too much in politics, ideally not at all. And so they play a very fundamental role in every country, particularly dealing with big issues and big changes. And so central banks are really important. They're certainly not going away. And frankly, they're becoming more important. This has been going on. They've been given more and more responsibility. After crises, oversight, more and more of the system. As we build out, multiple currency things, all this technology, that's not simpler. It's more efficient, it's more effective. It's not simpler. Something has to be there to oversee it all. That's going to be the central bank. So I just want to reiterate that not only central banks have been important, but importantly looking forward, not only are they going to be important in my view, probably even more important, they're going to have greater responsibility. That's good news for central banks. But it doesn't come for free. In order to be able to all this change which you've been hearing about, whether it's going to be Google taking over instead of banks or everything, all we know is going to be a lot of change for the good on the whole. The central bank has to have the skill sets and the knowledge to deal with this changing world, very much changing world. More complex in some ways, but to the benefit if it's properly managed. The school, in designing this program, one which I very much endorse and happily to be a part of it, has said we could do something to help all the nations, not just in Asia, but around the world, by creating a program which is focused on training people for central banking, not just general training, but training for central. I don't know of any other program in the world that is focused that way and has in-house residents. There's probably a few things on the internet, but you understand that's not comparable. So this is a bold move, and bold moves require, a lot of challenges in themselves, because it's not a roadmap of exactly how to do it. We're not copying anything, okay? But at the same time, the people who have become engaged in this, which I've come to know, obviously, as part of this, are, I think, other than myself, of course, really top-flight people. I mean, we have how many governors involved in this, and how many on the advisory board? What? 9. And we have, from all over. And these are governors. These are real. They know what they're doing. Who have committed to this. Now, they are part of the process of. They're not just here to meet. They're part of the process of looking of our plans of the curriculum, what we're going to teach students and how. Not the micro details, but what tools are we going to equip them with? How are we going to prepare people for the next generation or the next 5 years or 10 or 15 to be engaged in and eventually take leadership roles in the central bank? That requires a skill set, as I mentioned, far different. And that's what we are here to deliver. And as I say, this is the first one, but we've got really good people. We've got, as you heard from the faculty of the institute, MIT has been very committed to the school in general, and we're committed to this program. The faculty is very much involved, both not only people go there, but we come here. I'm sitting here, okay? MIT doesn't commit to this sort of thing lightly. So my point is, I think we have as good a team as you could ever put together, a combination. Practitioners, governors who lived it all, okay, leading academics, teachers who have had both experiences and can bring that. And so I'm very excited, and I think others should be, because this could be a really big deal. And so, this is not a startup coming out of, sort of a couple of people in pizza boxes sitting around having an idea. This is a major startup with very experienced people in doing this. And we think we put together the best team possible to do it. We will have challenges because it's new, but I'm confident that we can not only address them, but meet the purpose that we've been set for. So that's what we think is exciting. And I think as we show ourselves, we're going to attract far more attention and use than is expected. And then I remind you another thing, you have to have a little longer horizon for this, but think about this. If you bring the future leaders of central banks, not just here in Malaysia, not even just in Southeast Asia, not even just in Asia, if they start coming from around the world, and they all come here to Kuala Lumpur, and this is where they train, that's a permanent impact and a permanent connection between Malaysia, Kuala Lumpur, and a very influential set of people who are going to be making decisions. And last I would mention is, the world, as we all know, especially in finance, has gotten much more complicated. It's global. Effects happen here. Crises don't stay in one place. They're all over. That requires an enormous amount of cooperation across geopolitical borders. It requires central banks in many places to coordinate and cooperate. If they've all learned this, I don't mean the same language, whether it's, the words like English or something, but the same mindset, the way of thinking, the way of communicating, that's going to make that cooperation on the more effective long term as well, not just on an individual to individual basis. So you can see I have no passion for this.
Yes. Okay. Would you like to say anything or take questions? Go ahead.
I just want to emphasize two things that have already been said. One is that we focus on central bankers as the students almost exclusively. Second point is that geographical distribution from all over the world, not just Asia. And the third point is that we already have strong interest from over 20 central banks in the program. And we have firm commitments from 4 central banks to send a total of 11 participants already. And we have just started, so I think it shows the amount of interest in the central banking community for this program. And I think that suggests that the target of 40 to 50 will be met by the time the course will start next spring in June.
Yes, the program is planned for starting in June of 2020.
I'm going to say a couple words.
Professor Fine.
So I'm echoing some of Professor Merton's points, but I think we see economic complexity is increasing in the world. Financial integration is increasing, as the interconnectedness of economies. Volatility is increasing. Our most recent financial up and down in 2009 was the most severe since the Great Depression. The rate of technological change is high, and technological change in financial services is high. And we have these unprecedented surprises like reversal of trade volume. So we've had increase in international trade for the last many decades, and now because of trade war we have reversal. So, and why is that important? Because the next crisis won't look like the last crisis. We don't know what the next crisis will look like, but we know it'll be different. And we know that central banker, very often all of us go to war with the weapons from our last war, and how do we prepare the weapons for our next war, right? So in some sense, we want to prepare the leaders of the banking system, the central banking system, for the next war. Now, how do you prepare for the next war when you don't know what the next war is going to look like? You have to teach basic tools. You have to teach understanding of the interconnectedness of the economies. You have to understand what the dynamic forces are, how they work. You have to teach people to think flexibly and to think systemically about challenges. And you have to teach them to be flexible, to be adaptable, to be prepared in some sense for the unexpected, and to be creative and innovative. That because the next war won't look like the last war, the solution to the next war will look like the solution to the last war. It's going to have to be invented. And I think in some sense Governor Zady's notoriety in the central banking world stems from the fact that when she faced the last crisis she faced, she had to invent and innovate solutions as opposed to being able to just take off-the-shelf solutions. So we want to train people to be able to think creatively and innovatively and systemically about the challenges that they may face, but that no one can predict with perfection what will be faced. So agreeing with Professor Merton, I think to do this we have to build a team of people who are well trained, who understand central banking, who understand complex financial systems, who understand innovation, and we need to put together a curriculum for them, for our future leaders of central banks, that gives them these tools to be prepared for the next war. So I think that's what we're doing, and we're doing it at a time when the world needs that leadership in financial institutions. So that's our ambition.
All right, we're open for questions.
Professor Burton, I just have, it's really interesting that you've got, I'm very heartened that you have a Master of Central Banking program to groom the next central bank governor going forward. Makes me wish we had a Master of Prime Minister program, but that's a different issue.
Masters of what?
Prime Minister program. That's not an issue, but
That's coming next year.
hope you do it. But no, the thing is, all these technological advancements and all the complexities that Professor Fine has highlighted, they've already happened. I mean, do you feel like you're closing the barn door after the forces have bolted?
Oh, no, not at all. First of all, now I'm just, from your question, I have the great good fortune, for me anyway, that I was maybe born at the right time. But I have spent almost a half century of my professional life doing the greatest increase in financial innovation and improvements around the world. I was there almost 50 years ago when shocks hit the United States of all kinds, much worse in my opinion than we saw more recently. And the response to that, unlike in the past crisis, was a wave, an explosion of innovation to just all the new risks that had never been seen before. Some of the risks hadn't been seen for 100 years. There's no one alive who had even experienced them. And suddenly they all hit us: currencies, interest rates, inflation, and unemployment. High inflation, high unemployment, 10% inflation, 9% unemployment. Never seen them before. Instead of saying, oh my God, what do? We said, we have to manage risk. So we created an enormous number of innovations. That was 50, 45 years ago. That wave went on for almost 10, 12 years. And when you look at what innovations were done then, two things I would point out. The innovations were in response to crisis. Currencies floating, everything all of a sudden, and you had to build the markets to deal with those risks. What do you do about 10% inflation, 9% unemployment? All those things, okay? So we had to deal with the crisis. But almost everything that was invented or developed there, the options markets, the futures markets for financial futures, the national mortgage market, we changed financing of retail, residential housing in the United States from being local in the local neighborhoods to a global base where everyone in the world was financing retail housing. And by the way, I would mention in my point, in the 40-odd years since, there's never been a time in the United States where there wasn't mortgage money. The price went up and down, but never like what happened in the 70s, where there was no money for anyone for mortgages, no matter how it worked. Okay? I'm just saying, these innovations that came in not only addressed the problem of the moment, but have been paying social dividends for decades. I could go on about all of those. You have to look at those. You have to understand that innovation, financial innovation, has had an important, enormous impact. And by the way, afterwards, it spread to the rest of the world. These same markets that evolved originally in the United States, not just developed, every country in the world practically has these markets. They didn't do those markets under duress. They voluntarily brought their markets in. They wouldn't bring it in if they didn't think it was a good idea. So a reason I'm saying that with innovation, as was asked about, yes, there's risk with innovation, but there's risk if you get a high-speed train. If you get a 300-kilometer-an-hour train, but you don't yet have the track that can support it, and you run it at 300 kilometers an hour, you're going to have problems. That's inevitable innovation. Now, you can get rid of that risk by having no innovation. Well, I don't think many would vote for it. So these risks are essential. They're not a choice in that sense. So you need to manage them the best way and develop it. That's what this is about. So, you know, the idea of getting out, what boundary are you talking about? This doesn't end with one period. There will always be crises. There are always going to be improvements, and then as we improve, we use the improvement not to make ourselves safer, but maybe we're comfortable where we are, but we use the improvements to be able to take risks that were previously not prudent, but now are because we can manage it better. So we still have the same risk, but we get many more benefits to the risk we take. That's the way to think, the way to evolve. It's not we're constantly, someday over the rainbow, we're going to get rid of crises and all will be safe and calm, because that's not what people have said they want. They're willing to take risk individually and collectively in return for the opportunity of having a better life, a lifestyle. Okay? And so that's, you know, that's the raison d'etre for this. It's not like this is just ended and it's too late. This is not being done. This is coordinating part of the infrastructure, with all respect. That with big changes, often the infrastructure lags because you don't build infrastructure before you see what works. So the central bank, in that sense, is an important piece of infrastructure for the financial system, which in turn is critical to the economy. So we need to make sure that that infrastructure, like the track, is upgraded so you can take advantage of the 300-kilometer train prudently. You see? So if you want a metaphor to think about it, this is our contribution to this area, which we see as not only not going away, but being even more important, and bringing it up to be in coordination. So this is not a barn door closing. I would say, at least for my colleagues here who did this, I can talk about it. They actually built it from the governor on down. That I can say that they're path breaking. This is the first one, not the last one following, the past.
Thank you. It's kind of like what Governor Zetti said earlier about building resilience. This whole the program in itself. The other thing that struck me as interesting was one of the programs that you guys curriculum that you are looking at is ethics. Just how do you teach ethics?
Well, I don't want to dominate you.
Because I mean, central bankers generally have to tread this thin line between politics and their duty to the public. Case in point is Jay Powell versus President Trump. So how do you teach ethics in this sense, that balance?
It is integrated into the different aspects of the program. It is not a special session, but it's integrated throughout. That doing what's right, what's in the interest of the public that we have and what we have to deliver, and we will give real life experience. So our program is also grounded in reality. The students will be applying what they learn to in every aspect of what they learn. And that we will draw from the experience of many jurisdictions who agreed to come and speak throughout the program, and the pressures that central banks face from time to time, not only from politicians who have a shorter term horizon, whereas central banks look over the medium and longer term, and pressures from the market and market exuberance, and how do you deal with these kind of issues. And central bank senior management, including governors and deputy governors, have agreed already to come and be guest speakers throughout the course.
Maybe I could add a little bit. So in our MBA program, we currently have an ethics course. In that ethics course, students learn about legal obligations of managers, legal obligations to shareholders, legal obligations to their customers, the consumers, legal obligations to their employees, and legal obligations to their communities. And so we start with what are the legal obligations, and then the course has a series of case studies where the students see examples of times when managers may have violated what their obligations are, and the discussion for the students flows from legal obligations and whether people follow or violate those legal obligations into moral obligations, and asks whether there are moral obligations that managers might have that go above and beyond what the legal obligations are. And of course there's always room for debate, right? That if the law says you have to, there are certain requirements to be true to your shareholders or true to your customers or whatever, that's a starting point. But one can ask, even if it's legal, is it okay to do this or okay to do that? And we have in our MBA classroom students from 29 different nationalities. And so as you might imagine, there's quite a lively discussion about, well, in our country, this is the way we think about moral obligations, and another obligation. One cannot program the minds of our students that you must act in this way, but we can help them appreciate what are the issues, how other people perceive them, what the reputational effects are of behaving in certain ways, and try to provide as many examples as possible to help people see a path towards what building their own mental model of what is moral behavior and what is ethical behavior.
And in central banking, to draw the parallel to it, while we don't have like the shareholders and so on, is all about accountability, and then the level of transparency and allowing ourselves to be scrutinized to the highest degree, that we are acting in the interests of our nation.
I would add, because I think it's very important, that if you have, with my students, but it's the same here, I actually think for many, many things that you do in business or performing a role, that the value maximizing, if you like, the best for yourself or for your institution is actually, if you have real value to add, is doing the right thing. I mean, we do the right thing because that's what we were taught, we hope. I mean, sometimes we all fail. But this is what I'm showing them. It's actually the value maximizing way. If I can build in certain areas, and I can't think of an area, big area, any more important than in central banking, if I can build trust with my clients, trust with my regulators, trust with the society, I can do things that are phenomenal. And people will not replace me with another person, even at a better price, if they know they can trust me and they don't know if they can trust you. I don't mean the other person's bad, you just don't know. So I treat trust as an asset for this purpose. I don't want to make it sound like it's all mechanical, that's why I gave it this preface. But for this purpose, I try to show them this is the best strategy, that you really, many times, don't have a conflict between doing the right thing and making the most money, or doing the right thing and making Mr. So-and-so happy. And so part of it is to show them that and to have them realize that the greatest value, even to them, and I don't mean just money, I mean how they're seen, and we have examples of, for example, we actually have real examples, real people. There's somebody in the room, I won't mention, not in the room, in the building, who, stood up as a central banker and said no to the president or to the leader. We're not going to do this because this is not the way the bank does. And that takes courage, but if you show students two things, one, that it was done, two, that among their peers, we all, you're a journalist, we all like appreciation, but I think you really like appreciation from other journalists, because they're the ones who you really care about. They say, he's really good or he's really good. You see what I mean? And that's true in every field. So if you bring students in, mature students, and they see this behavior, and they see the respect, the long-term respect, not in the moment, that it's garnered by standing up and doing the right thing. That helps to build confidence and willingness to behave that way. So it's I'm not talking about there are many ethical issues that require you to decide. If there's a pot of money sitting in that bag, you turn it in or something. But not in many of these things. And if you remember that a central bank can do its job much better for itself, but for society, if it's trusted. If you really trust the central bank, and central banks for the most part, I think that's where we started, are the most trusted financial because of their minds, what they know, and because of their trustworthiness, that they instill, that they are able to perform their role in society much better with trust. And that's some of the lessons that I certainly believe that we will communicate by not only word, by showing deed, that this is to do it. And beyond that, there's limits. But I think it's fair to say that it's a commitment of the program, that always be emphasized by everyone in all cases as a given. And that I think that also is the best thing if you're going to train people to run a central bank the best way. So I just wanted to add to that, because sometimes we think there's this big trade-off, and in many cases it's more recognizing what's important.
Let me add to what Bob said. Because central bank officials are not elected into office. All they have really is trust. trust by the public. And trust comes from three things: reliability in doing what they say they will be doing, B, their accountability, explaining why they did what they did, and 3, ethics. They have to act in an ethical way. That's how they build trust, and central banks cannot operate without trust.
The effectiveness of a central bank is based on the trust and respect that is given to it. It's not the legislation. It's not the legislation that gives it power, but it's the trust and respect by the public, by the financial markets, by the financial industry, and by the government. That is very vital, the trust and respect. And that is what will determine the effectiveness of the central bank.
I think we have a front page story here.
So I just want to clarify something. The master is offered exclusively to central bank's employees.
At this point in time,
At
yes.
this point.
Yes.
Then the intake is once a year.
Yes. And so it's a 12-month program. So they will graduate in 1 year from the program, and we will have an annual intake.
We should also probably mention that the program has to be approved by the MQA, the Ministry of Education. That we
Yes.
have submitted all of our paperwork and all of our applications for that process, and the MQA is in the process of reviewing our application.
So we've made a preliminary submission, and then based on today's advisory board meeting, we will finalize that, and we will, in the very near term, will submit it to the Ministry of Education. Following which, we will commence the enrollment process, inviting applications from more than 100 central banks from around the world.
We can also mention that ASB as an institution has also applied for international accreditation for the entire school, and that review process is underway. So we expect to be accredited both by the Malaysian authorities as well as the international accreditation agencies.
If I might pick on something you said in the proposals now, you talked about your observations as a central bank governor with regards to the financial crisis that's pending, and one of the things you noted was that there would be 6 to 8 months of volatility before that happens.
Well, that was the experience
Yeah,
in previous
so-
crises.
So, if I'm not wrong, I think we've seen like close to 9 months of volatility already this year. What would your summation be?
Certainly, the volatility hasn't been of the kind of degree that you saw both in the US, but both in the Asian crises and in the advanced economies, US and Europe and UK actually. It hasn't reached that kind of degree. So the world is still in a state where if they manage the current conditions well, then we will not transition into a crisis. So, but this concerns mainly in the developed financial markets rather than our own markets. So far, in most emerging economies, we actually see that ours is the consequences or the contagion from developments in the major economies. And furthermore, if we look at emerging economies, they still have policy space, both monetary policy and most other countries also have fiscal policy space. And so I'm not such a pessimist as you might have tried to conclude.
That was the impression I got actually, and I started to worry.
No. What I'm saying is, because the crisis may not happen in our jurisdictions. But just like the previous one 10 years ago, that is why I have suggested, because they use the acronym GFC, and what they used it for was global financial crises. So I said that is wrong, because it was we in many parts of the emerging world, both here in Asia and Latin America, we were not experiencing a crisis, but we were experiencing the effects of the crises, and it did set us back, but we were not disrupted, and therefore I wouldn't describe that we were in a crisis. But the point is, we were in a state of readiness to manage those effects, and if we were not, we might have been in a crisis. So the point is, yes, we could be set back, but we have the potential to manage it and to bounce back.
Hence, your talk about the importance of building resilience with the central bank and the system. So, in this current scenario, how ready is BNM and the Malaysian economy in general?
Well, I would describe it as it is in a state of readiness. It is in a state of readiness. It has the capability. And that is why the central bank is such an important institution, because in these kind of situations, they are in the front line. They are in the front line, and therefore they need to have this strong capability. And our effort here is to contribute to that for central banks globally.
Into the future, not just for today.
And not just for today, going forward into the future. And if you read our curriculum and so on, we describe as our program being very forward-looking, because we will look into all the digitalization, AI, and all the other things that are developing, so that we will be in a state of readiness, having an awareness of what the issues and challenges are, what kind of surveillance that we need to put in place, what kind of regulatory regime and supervisory oversight and so on to address these kind of issues. So that is why we believe that our program is relevant for today and tomorrow and going far forward into the future.
That's my next question.
Your children's well-being is dependent on the central bankers of the world.
I think the volatility that's going on is a result of two forces. One is trade tensions that tends to push the markets down. And then there's a reaction from monetary policy, not from here, but from the advanced countries. The easing of monetary policy tends to push markets up. So we have that kind of volatility. But I would say, as Zeti would say, we're not yet in crisis territory. And the emerging markets who are caught in the middle have built enough resilience to withstand that volatility.
And this nearly close to zero interest rate regime that so many central banks are advocating right now, how do you see that affecting emerging markets like Indonesia, for example?
Well, I'll say it because I'm not a central banker. Now, if a central banker says you've got to put a lot of weight on it, you might even say this is what the central bank plans to do. But since you understand I'm just a teacher, I'm giving you a view. And one of the things, this is self-exemplifying. You look at, you have negative interest rates. Now, to me, no, not personally, but professionally, there's nothing special about negative. It's just very low. I mean, there's nothing, the world doesn't suddenly become topsy-turvy if you pass through zero. It might, okay? But that's an aside. But the more important thing is, let's suppose I'm one of our trained bankers who's trained to be, as you say, flexible to deal with the reality of the future rather than look to the past. Suppose in the past we had, this is hypothetical now, suppose we have another crisis and we're in a part of the world where all the interest rates are negative. And they say, we can't make them any more negative, we're out of fuel, right? What could I do? Well, if I want to stimulate business investment, not inventories, but real investment, if that were my policy for some reason, I could do that very directly by entering into directly taking the risks of equities. Instead of doing open market operations in some bond, just do it in equities, but not buying the stocks, which would put governments into buying stocks and governance, and that makes us all uncomfortable. But in today's world with the markets there, they could enter into futures contracts or swap contracts on thousands of stocks in the country or whatever, and take the exposure without any ownership, without any governance, without any interference with the way it was done, using futures contracts. But by taking the risk on the government balance sheet and taking it off the private sector, if they're successful, and that if is a technical question, equity prices will rise, cost of capital goes down, cost of capital goes down, companies will invest. That's a direct, and I'm giving this as an example, not a policy decision. In other words, something that used to work doesn't work anymore. If you just learned the rule, oh, but you're supposed to lower interest rates. That's not the kind of class we're teaching. I'm glad you asked the question, because this makes a point. If we just taught them, what you do in tough times is to lower interest rates, and now I go to do that for my textbook or something in my class notes, and I can't do it because the rates are negative. If I understand the principles of markets, if I understand how things work, rather than some rote rule, I'm in a position to adjust to that which we didn't know was going to happen but did, and be able to find an alternative tool or approach to achieve the same objective, which is some kind of stimulation or what, and you can pick any policy you want. But the key is, when you're in uncertain times where the world is changing, technology is changing, how we do things, to be prepared to handle that change. And in fact, almost endorse it, saying, look, I've been trained to deal with change. Do you see what I mean? Then that's the kind of person you want running the central bank, particularly in that environment. It's no magic. Sometimes things can't be fixed. That's life, okay? But the best people to try to fix it are those who are capable of adjusting to new situations that aren't a repeat of the past. And so your question actually stimulated, that's why I'm sort of passionate about answering it to you, because it illustrates exactly what we're trying to achieve. It's a self-exemplifying case.
Which is like, I suppose, kind of like, would you say then that President Donald Trump who's trying to call for lower interest rates, that he's slightly out of date?
You understand that I'm considered, you have a Nobel Prize in economics for a very specific thing. So in that area, I have a responsibility to answer a question seriously. I mean, with real, you should maybe listen to me. I'm not a political scientist, and I'm not a personal psychologist of the President of the United States. So I don't think I'm really qualified to the scale that you should take it seriously. But I ask you the following question. Governments all the time, people, especially executive branch or those who are elected, they want what they want. And if they have different ways of doing it, sometimes they do it with a smile, sometimes they use good arguments, and sometimes they try to bully or do something, okay? I'm not going to comment on the technique. I think you can see for your own selves. You don't need me to discuss that. But however it's done, he said he wanted lower interest rates. One reason could be, I said could be, I don't know, that he wanted lower interest rates because he thought it would help the economy and it should be done. Possibly. I frankly, even if he hadn't said it, don't believe that if we're going to get a recession in the United States, it's not going to be stopped by lowering interest rates a quarter point or half a point. I wish it were that easy. That's opinion. Therefore, what's another possibility? Suppose I want someone to blame if it goes down. And I can say, see, it wasn't my responsibility. It was the Fed or the central bank that didn't do what I told it. But I don't want to personify this too much with the president of my country. There's plenty to say. I think you'll find that almost all leaders of get into conflicts with central banks for the very reason that was explained. That's why we give central banks the protection we do, because they want to do things understandably or not take blame for in an election year for things that were done. And what we have to do is try through our rules and so forth to protect the institutions that are required, not to just listen. And I think you need to look at what happens versus what's said. I don't want to make an opinion on how the Fed responded to his so-called pressure. I don't see any material evidence that it caved in and covered it. Yes, they did cut rates, but they were probably going to cut rate anyway. They didn't need it. They've got enough data that they were concerned. Whether that's a good judgment or not, that's easy for me to say, but if I'm the head of the central bank, no one's going to be happy with what decisions you make. They're going to second guess you. But I don't think there's blatant evidence that the central bank put its hands up in the air and said, yes, you take control. And if you look at the language and stuff that has been said by the executive about the central bank chairman, I don't think that sounds like somebody saying, gee, I'm glad you did what I told you. So there's a lot of rhetoric, and all I'm saying is look at fact. You can see it. And that's, I guess, about where I would leave it. But I just take this as, leave aside how it's done. But this is always the case, as this tension is there. And that's why we create the safeguards we do. If it wasn't a tension, we wouldn't have it. So I wouldn't read too much into that particular aspect of it.
So if there's no further questions or anything pressing, maybe we come to the end of the press conference? Is that all right?
Thank you very much.
Thank you very much.
Thank you for your time. And I hope, in fact, I really hope your story is the one that's going to end up being more influential than what everybody ran off to do. They're going to find out it's just chapter 47 of an ongoing saga. Don't be quoted on that. I mean, I don't mean that. You understand it's said in good humor, not in so let's be just very clear. But I hope that you get our message, the message there, that this is pretty meaningful for central bank, meaningful for the economy, meaningful for the region. And I think meaningful for Malaysia and Kuala Lumpur, because it's happening here. The leadership's happening here. And I think that's pretty cool, no matter where you come from.
So thank you very much. Yes.